Consider Warren Buffett's track record if you've ever questioned why Wall Street experts and regular investors pay close attention to what Berkshire Hathaway CEO Buffett has been purchasing or selling. Many things have contributed to Warren Buffett's success, including his long-term outlook, preference for dividend companies, and interest in cyclical industries. Welcome back, everyone. In today's video, we will discuss all three stocks Warren Buffett keeps buying. Remember to subscribe to our channel. Let's begin. However, Buffett's rejection of portfolio diversification may be at the top of the list of factors contributing to Berkshire Hathaway's success. Investors can only rely on diversification if they don't know what they're doing, according to the Oracle of Omaha. When considering or discussing the financial sector, many people surely think about Warren Buffett, sometimes known as the Oracle of Omaha. He is one of the most well-known figures in the field for a good cause. He has generated excellent results. Buffett is a businessman and philanthropist. He serves as the CEO of Berkshire Hathaway, BRK.B, a diversified holding firm whose businesses work in manufacturing, energy production and distribution, insurance, and freight rail transportation. And in 2022, Buffett has stepped up his game, capitalizing on the significant market recalibration. With just three stocks representing 59% of Berkshire Hathaway's $345 billion investment portfolio, Warren Buffett is an expert in his field. Let's talk about them. Number 1. Apple, $135.3 billion, 39.2% of invested assets. As of the conclusion of the previous week, Berkshire's investment in the tech stock Apple, AAPL 0.25%, accounted for more than $135 billion of the company's invested assets, not counting the funds owned by Warren Buffett's covert portfolio, New England Asset Management. For every $1 invested by Buffett's company, Apple received over 40 cents. Apple provides Buffett with three major selling advantages in addition to being the biggest publicly traded firm in the United States. The value of its brand and the level of client loyalty it fosters comes first. Apple recovered the top rank as the most valuable brand in the world, according to Kantar Brand's global study published in June. Numerous competitive advantages, technological advancements, and consumer-friendly products were mentioned in the poll. For instance, the iPhone has absorbed slightly more than half of the U.S. smartphone market. Innovation is the second factor that makes Apple such a reliable investment. The firm is changing its operating model to concentrate on subscription services and creating smartphones, laptops, tablets, watches, and other accessories that people truly like. By switching to a subscription-based platform, income peaks and valleys, frequently brought on by replacing physical products, should be reduced. Additionally, subscriptions have larger margins and generally result in more devoted customers. The capital return of Apple is the third factor that makes Warren Buffett like the company. Although Apple's nominal yearly payout of $14.64 billion may not seem like much, it is among the highest in the world. Its 0.6% return may seem like little too. Furthermore, the business has repurchased $554 billion of its stock since beginning a vigorous share repurchase program in 2013. To put this buyback program size in perspective, only 5 S&P 500 businesses other than Apple have a market cap greater than $554 billion. Berkshire Hathaway just so happens to be one of them. Even if it's not immune to cyclical slowdowns, Apple is still in a strong position to prosper in the long run. Number 2. Bank of America, $37.3 billion, 10.8% of invested assets. Bank of America, BAC, negative 0.06%, is the second stock that Warren Buffett and his investment group have invested heavily in. As of last week, Bank of America, or BOFA, represented over 11% of invested assets. Remember that this number only reflects positions held by Berkshire Hathaway-owned New England Asset Management, a special investing firm. Financials are cyclical, which is probably why they are Buffett's favorite industry. The Oracle of Omaha is a long-term investor and knows that economic expansions typically endure much slower than downturns and recessions. Bank stocks such as BOFA suffer during recessions but gain much more from unusually long booms. In other words, investing in bank stocks requires a lot of patience. The $37.3 billion invested in Bank of America during this period is quite interesting. The Federal Reserve has never before aggressively raised interest rates in the face of a falling stock market. Higher interest rates should be advantageous for banks with outstanding variable rate loans, even while they threaten to reduce economic growth and cool lending. The third quarter of this year saw a $2.7 billion increase in net interest income for Bank of America. The business forecasts that a corresponding 100 basis point move in the yield curve would generate an additional $4.2 billion in revenue over the following 12 months. The digitization drive by Bank of America is also paying off. The company reported 48% of all sales were completed online or through a mobile app at the end of September, with 43 million active digital users, an increase of 5 million from the same quarter in 2019. In addition to offering more convenience, digital transactions only cost banks a small portion of what phone and in-person-based engagements do. BOFA should be able to merge some of its branches and increase its operational effectiveness as more users switch to internet banking. Lastly, bank stocks have a long history of rewarding their shareholders in prosperous times. It's not unusual for Bank of America to approve capital return schemes totaling more than $20 billion annually, including dividends and share buybacks. Number 3. Chevron, $30.7 billion, 8.9% of invested assets. Chevron, CVX 0.66%, an energy company, is the third stock in which Warren Buffett invested a sizable percentage of Berkshire Hathaway's investing portfolio. Nearly 9% of invested assets as of last week belong to Chevron, including the shares also held by New England Asset Management. This position is interesting because before 2022, energy stocks didn't account for more than 8.9% of Berkshire's portfolio allocation. Energy is now Buffett's third largest sector by invested assets, with Chevron alone accounting for 8.9% of the total. Occidental Petroleum also played a role. Buffett is making it obvious that oil and natural gas prices will continue above average for some time by investing around an eighth of his company's invested assets in energy stocks. Chevron is an integrated operation, but drilling is where it makes the most money. Energy businesses' underinvestment in response to the epidemic and Russia's invasion of Ukraine support higher spot pricing for energy commodities, which is problematic for the energy supply chain. Additionally, Chevron is a much safer investment than most oil and gas stocks. In addition to drilling and exploration, it also manages midstream pipelines and downstream assets because, as was previously mentioned, it is an integrated operator. Midstream providers use long-term fixed-fee and volume-based contracts with drillers to create predictable cash flows as the price of crude oil declines. Refineries and chemical plants profit from increased demand and lower input costs. In other words, Chevron is prepared for anything the energy market may bring. It is an oil stock with a spotless balance sheet as well. Chevron has $8.2 billion in net debt as of the third quarter's end, or a debt ratio of 13%. That puts Chevron in a stronger financial flexibility position and is below almost all significant oil and gas stocks. Chevron has also been able to raise its dividend and implement a share repurchase program for up to $15 billion worth of its common shares in 2022 because of historically high energy commodity prices. A corporation can win Buffett's favor by having a strong capital return program and an industry-leading balance sheet. That's all for this video. We'll be back with another video soon. Remember to like and share this video. Until next time.